Fortinet just shocked the market with a massive post-earnings rally after months of sideways trading. The stock jumped nearly 14% as investors reacted to stronger margins, resilient enterprise demand, and growing optimism around AI-driven cybersecurity. But here's the real question. Is this the beginning of a bigger breakout for Fortinet, or just a temporary relief rally? In this video, we'll break down Fortinet's Q1 2026 earnings, analyze the fundamentals, examine the valuation, and see whether FTNT could become one of the biggest cybersecurity winners in the AI era. Fortinet is one of the world's leading cybersecurity companies, specializing in network security, enterprise protection, and AI-powered threat detection. Founded in 2000, the company built its reputation through high-performance firewall solutions known as FortiGate, which are widely used by enterprises, governments, and data centers around the world. But Fortinet is no longer just a firewall company. Today, it operates a broad cybersecurity ecosystem called the Security Fabric, integrating networking, cloud security, endpoint protection, zero-trust access, and AI-enhanced threat intelligence into one platform. One of Fortinet's biggest strengths is its combination of strong profitability and large-scale enterprise adoption. Unlike many fast-growing software companies that struggle to generate cash flow, Fortinet consistently delivers high margins and strong free cash flow. As cyber threats continue to grow and AI increases the complexity of digital attacks, demand for advanced cybersecurity solutions could remain a long-term secular trend, placing Fortinet in a strong strategic position for the years ahead. Fortinet holds one of the strongest positions in the global cybersecurity industry, particularly in network security and enterprise firewall solutions. The company competes with major cybersecurity players such as Palo Alto Networks, CrowdStrike, and Cisco. But Fortinet differentiates itself through its integrated hardware-software approach and highly efficient operating model. Fortinet's flagship FortiGate firewall products are widely recognized for performance, scalability, and cost efficiency, making them popular among enterprises, telecom providers, governments, and large organizations worldwide. What also makes Fortinet unique is its broad security fabric ecosystem, which connects networking, cloud security, endpoint protection, and AI-driven threat intelligence into a unified platform. This creates higher switching costs for customers and strengthens long-term recurring revenue. In recent years, the cybersecurity market has become increasingly competitive, especially with the rise of AI-powered security solutions. However, Fortinet continues to maintain a strong position thanks to its global customer base, strong profitability, and expanding enterprise security portfolio. As cyber threats become more sophisticated and digital infrastructure grows more complex, Fortinet remains strategically positioned as one of the key players in the long-term cybersecurity megatrend. Fortinet delivered an impressive Q1 2026 performance, significantly beating Wall Street expectations and reigniting investor optimism across the cybersecurity sector. Revenue grew approximately 20% year-over-year to around $1.85 billion, coming in well above analyst estimates. Even more impressive, billings surged roughly 31%, showing strong enterprise demand and healthy future revenue momentum. Profitability remained one of Fortinet's biggest strengths. Non-GAAP earnings per share jumped about 41% to 82 cents, while operating margins expanded to nearly 36%, highlighting the company's exceptional operational efficiency. The company also generated outstanding cash flow during the quarter. Free cash flow reached a record level of approximately $1 billion, with free cash flow margins approaching 58%, reinforcing Fortinet's reputation as one of the most profitable companies in the cybersecurity industry. Another key highlight was management's strong forward guidance. Fortinet projected Q2 revenue above Wall Street expectations and raised confidence around full-year 2026 growth, supported by increasing demand for AI-driven cybersecurity solutions and enterprise network security upgrades. Overall, Q1 2026 showed that Fortinet is not only maintaining strong growth, but also improving efficiency, margins, and cash generation at the same time, a combination that very few cybersecurity companies can consistently achieve. Fortinet delivered one of the strongest post-earnings reactions in the cybersecurity sector this quarter. Right after the earnings report was released, FTNT shares surged nearly 14% in after-hours trading as investors rushed to react to the company's strong revenue growth, accelerating billings, and impressive margin expansion. But the momentum didn't stop there. As the market opened the next day, buying pressure intensified even further, pushing the stock up more than 20% at the opening bell. The explosive move reflected a major shift in investor sentiment after months of sideways trading and cautious expectations surrounding the company. Investors appeared particularly encouraged by Fortinet's strong enterprise demand, record free cash flow generation, and management's confident outlook for the rest of 2026. In many ways, this wasn't just a normal earnings beat, it was a complete re-rating event. The market is now beginning to price in the possibility that Fortinet could re-accelerate growth while maintaining some of the highest profitability levels in the entire cybersecurity industry. After spending nearly 4 months consolidating, FTNT may finally be entering a new momentum phase, and Wall Street is clearly paying attention. Now, let's take a look at a small portion of Fortinet's financial ratios for fiscal years 2025 and 2024. Starting with gross margin, Fortinet reported a gross margin of 80.46% in fiscal year 2025, compared to 80.56% in fiscal year 2024. Gross margin measures how much profit the company keeps after covering the direct costs of its products and services. In simple terms, for every $100 of revenue Fortinet generates, the company keeps about $80 before operating expenses. Even though the margin declined slightly from 2024, maintaining an 80% gross margin is still extremely strong and highlights the premium nature of Fortinet's cybersecurity business. Next, we have return on invested capital, or ROIC. Fortinet posted an ROIC of 66.58% in fiscal year 2025, compared to an extraordinary 107.98% in 2024. ROIC measures how efficiently a company generates profit from the capital invested into the business. A high ROIC indicates that management is allocating capital very effectively. Although ROIC declined from the unusually high level seen in 2024, a figure above 60% remains exceptional and still places Fortinet among the most efficient companies in the technology sector. Moving to free cash flow margin, Fortinet generated an FCF margin of 31.91% in 2025, almost identical to 31.88% in 2024. Free cash flow margin measures how much actual cash the company keeps after operating and capital expenses. This is important because cash flow gives the company flexibility to invest, expand, buy back shares, or strengthen its balance sheet. Maintaining a free cash flow margin above 30% demonstrates Fortinet's ability to consistently convert revenue into real cash at a very high level. Finally, interest coverage improved significantly to 28 times in fiscal year 2025, up from 20 times in 2024. Interest coverage measures how easily a company can pay interest expenses using its operating income. The higher the number, the stronger the company's financial stability. An interest coverage ratio of 28 times indicates that Fortinet's earnings are far more than sufficient to cover its debt obligations, reflecting a very healthy financial position overall. Now, let's shift our focus to several key positive catalysts that could potentially push Fortinet stock higher going forward. The first major catalyst is the growing demand for AI-driven cybersecurity. As artificial intelligence becomes more powerful, cyber threats are also becoming more advanced and difficult to detect. This is creating stronger long-term demand for enterprise security solutions, an area where Fortinet already has a strong competitive position. The second catalyst is Fortinet's exceptional profitability and cash flow generation. Unlike many high-growth cybersecurity companies, Fortinet consistently produces strong margins and massive free cash flow. This financial strength gives the company flexibility to invest in innovation, expand its AI security capabilities, and continue returning value to shareholders. And finally, Fortinet could benefit from a broader recovery in cybersecurity spending. After a long period of cautious enterprise IT budgets, companies are once again increasing investments in network security, cloud protection, and AI infrastructure. With strong fundamentals, high profitability, and growing exposure to long-term cybersecurity trends, Fortinet appears well-positioned for the years ahead. However, despite the strong earnings report and bullish momentum, investors should also pay attention to several potential risks that could negatively impact Fortinet stock going forward. The first major risk is slowing growth. While Fortinet remains highly profitable, revenue growth has moderated compared to the hypergrowth phase seen during previous years. If enterprise spending weakens again or customer demand slows further, the market could react negatively to any signs of deceleration. The second risk is intensifying competition within the cybersecurity industry. Fortinet competes against major players such as Palo Alto Networks, CrowdStrike, and Cisco, all of which are aggressively expanding their AI-powered security platforms. The cybersecurity market remains highly competitive, and maintaining market share will become increasingly challenging over time. Another important risk is valuation expansion after the recent rally. Following the strong post-earnings surge, investor expectations for Fortinet have increased significantly. If future earnings results fail to meet those elevated expectations, the stock could experience higher volatility or short-term corrections. Finally, macroeconomic uncertainty remains a factor. Enterprise cybersecurity spending is generally resilient, but large corporations can still delay infrastructure upgrades or reduce IT budgets during periods of economic weakness. So while Fortinet's long-term outlook remains attractive, investors should still balance the bullish narrative with the potential risks that could impact future performance. Now, let's shift our focus to Fortinet's valuation, where the estimated fair value currently stands around $124 per share. Following Fortinet's exceptionally strong Q1 2026 earnings report, several Wall Street analysts have revised their price targets higher, with some now projecting the stock could move toward the $125 range. Despite the recent rally, FTNT still appears to be trading relatively close to, and in some cases slightly below, its estimated fair value, suggesting that the stock may continue to have upside potential if the company maintains its strong execution and growth momentum. However, investors should always remember that every investment decision involves balancing both risk and reward. Strong earnings momentum does not eliminate the possibility of volatility, especially in a highly competitive and fast-moving sector like cybersecurity. As always, investors are encouraged to remain disciplined, carefully evaluate their own risk tolerance, and make investment decisions wisely based on both fundamentals and valuation. Overall, Fortinet delivered a very strong Q1 2026 earnings report, supported by solid revenue growth, expanding margins, and exceptional free cash flow generation. The recent breakout also suggests that investor confidence in the cybersecurity sector may be returning, especially as AI continues to increase demand for advanced security solutions. However, investors should still pay attention to risks such as slowing growth, rising competition, and potential valuation volatility after the sharp rally. For long-term investors, Fortinet remains one of the highest quality cybersecurity companies to watch going forward. This content is for educational purposes only and does not represent financial advice. Thank you for watching, and don't forget to like and subscribe for more insights.